Jenna is recording. Thank you, Jenna. Should we get started? I can't see how many folks are in here, so should we get started? And you tell me, Jenna, yes. Yeah.
All set. Yes. Thanks, everybody.
All right, let's do this. Welcome everybody. I am dialing in from New York after taking a red-eye flight and sleeping very, very little. So I promise that I'm going to try to make as much sense as possible today. But luckily we're in very, very trusty hands with our friend Roy Bahat here. So am I pronouncing that right? I never know. I am? No?
Everybody in my family pronounces it
matter?
differently, so you'll be fine.
Great. Roy.
And I'm just relieved you're off a red eye because then, like I won't look completely out of it by comparison. So we're good.
Oof. Oh, red eyes. They always seem like a good idea. And then I do them and I'm like, why did I do this? And I will never learn this lesson. Anyhow, for those of you who don't know me, I'm Leslie Feinzig. I am the founder of the Female Founders Alliance. Thank you all for being a part of our community, and also the founder of our VC arm, Graham and Walker, investing in women-founded companies. And a few of the companies that we invest in are in the world of work. Who gets to have a job, and what does that job do, and how do we perform it, and how do we keep people in the workforce? And through investing in that space, I learned a lot from the writings of Roy Bahat, who is here with us. And I had the opportunity to meet you. I don't actually remember how we met. I think maybe on social media or something like that. And then I met you in person, and we have since co-invested. And I am just absolutely thrilled to finally get to put you on our stage and hear some of the foremost. Maybe I shouldn't set the bar too high, but I'm really, really excited to hear about what future of work means, and why it's important, and why we should think about it, and how we should think about it from someone who's been doing this work really before it was cool. And so with that, let me actually read your bio because it's pretty good. Roy Bahat is the head of Bloomberg Beta, the first venture capital firm investing in the future of work, with a specialty in machine intelligence. Before Bloomberg Beta, almost a decade ago, Roy started a venture-backed company, was a corporate executive at News Corp, in government at New York City Hall, in media, and in academia. So really, you do it all. He was named one of Fast Company's most creative people in business, chairs the Aspen Business Roundtable on Organized Labor, and is a commissioner of the California Governor's Future of Work Commission. Today, Roy serves on the faculty at UC Berkeley, where he teaches 2 courses, one on media and a first of its kind country course on organized labor. Welcome, Roy. Thank you for being here. How are you today?
Thank you for having me. I'm excited to do this. This is why I do what I do.
Well, why do you do what you do?
Well, I mean, so having worked in government, big corporations, nonprofit, academia, I'm trying to think of all the other dead ends that I wandered at one point or another. I just realized that of all the different valid, wonderful ways to change things, I like startups the best. Like, I think they operate the fastest. I think when they work, they're just so fulfilling and exciting. And now my job is startup founders are my customers. And so like the way I kind of think of it is I'm like a country doctor, and like the founders are like athletes, and my job is to like patch up their knee and, wish them back out onto the field. And that's a lot of fun because I get a lot of energy. Like when I was a management consultant, I guess that was another thing. I thought I hated client work because like clients are the worst. I mean, if any of you have had B2B businesses where clients, but then I realized it's not that clients were the worst. It was that I just didn't like those clients. Like middle managers at big corporations, I did not want to serve. But startup founders, like especially, startup founders who have like long odds of something, put me in the game.
That's real fun. So, I mean, it's a very, very broad and varied career. How did you reach this point? Like, tell us a little bit what is the through line for all of the work that you did that led you to Bloomberg Beta?
I'm not going to pretend there was a through line because I was really like agonizing the vast majority of the time. I would say that the pattern has been that I'm a bit of an action junkie. And so I would just go to where the action was. And so, I graduated from college and it was the first dot-com boom. And my feeling during that time, and I don't know if we have any Web3 founders here, so apologies in advance, I'm about to insult you, is that, a lot of the people who were doing internet entrepreneurship at that time were like the last generation of Web3 founders. They're like a handful of them. that were really awesome and deeply thoughtful, but most of them were bullshit artists and like just selling snake oil. And so I didn't really like it, but I knew something important was happening. And I went to try to understand it by going into the business world. And then 9/11 happened, and I grew up in New York, and New York was rebuilding. And so the action was in rebuilding New York. And for the last 15 or so years, I've finally found a place where I feel like I can stay, which is the world of early stage startups and technology. And so 11 years ago now, we started Bloomberg Beta, and I had started a company before that and felt like um, I honestly just didn't think my VCs were all that helpful. And so many VCs who didn't invest in us were pretty awful. And so I was going to go start another company, but the Bloomberg guys wanted to start a corporate VC firm. And I told them I didn't think they should do it because VC is, insert terrible things here. And they said something that I've now learned is very Bloomberg and really, I thought, well, worked, which is they said, well, okay, fine, you don't want to do it. But if somebody like you were going to start a venture capital firm, how would you set it up? And we set up what ultimately became Bloomberg Beta. And one of the core insights was we saw that technology had affected so much of our personal lives, how we shop, how we connect with our family and friends. But when you thought about what people's experience was at work, it was generally the same. There people were still using Lotus Notes, like no joke. In fact, even today, there are probably still people who use Lotus Notes. And our bet was that work would transform. And this was I think turned out, you said before it was cool. I don't know if it has become cool, but definitely that's what we've been doing throughout. And and I found that that the action junkie in me continues to be really satisfied. And now with AI, we were the first VC firm to focus on investing in AI. That was 2014, and so it's felt like a maelstrom all around us.
So, I mean, and I have two questions, but I actually think that they're the same question. So first,
Okay.
it's about your investing focus. So how do you define the future of work?
Yeah, we think of the future work really broadly. We we the short answer is if you think it is possibly connected to the future of work, then we think of it as connected. I'll post something into the chat, which is we did a talk about kind of literally what we include, and the short version of it is anything in the work stack, so productivity tools, media at the kind of application layer, business applications like CRM, et cetera, and data infrastructure. And we'll do anything in that stack. And then we'll also do entire companies that just have some new idea about work embedded within them. So our most highly valued company is Flexport. We were the first VC to say yes to investing in Flexport, and it's a shipping broker. And so that's kind of roughly how we think about it. And companies like Masterclass kind of live at the top end of the application layer. Slack is more of, a business application. Weights and biases, if folks follow machine learning tooling, is more on the infrastructure side. Lambda, also more on the infrastructure side. Replit, et cetera, et cetera. And then, I'll also just say, just because it's in the future work doesn't mean we know enough about it to be good investors in it. So one of the questions we ask ourselves is, if this business goes sideways, will we know enough to feel confident in wanting to support the founder? Because everything goes sideways in startup land. And so there are plenty of things like retail, for example. I just don't know well enough. And we avoid financial services. So if the first aspect about our firm was focusing on the future of work, the second is we just invest to make money. We're just a regular VC. And that's not because making money is the most important thing. It's because it gives founders an easy, legible way to understand what we do. And transparency is really important to us. In fact, I'll just post our website. If you go to our website, it's actually just the operating manual for our fund, hosted on GitHub. And you can just see the questions we ask in diligence and all that kind of stuff. And so we don't touch financial services, and there's a few kind of like irregular, I don't know, missing teeth in our smile or something like that. But that's how we think about the future of work.
And so how does a company know whether they should pitch you or not?
They can.
How do they?
So read the manual is the thing I usually say. I mean, 90% of my pass emails are and I don't respond to cold pitches that aren't like customized to us, because my attitude is I'm not going to put more time into responding to a founder than they put into me. Like if what they put into us is just literally we're a line on a spreadsheet, and it's like, I put my middle initial into my first name on LinkedIn so that I would know that if their thing included my middle initial, it meant they were just
Oh,
doing
that's
it's like a
evil
little
genius, right?
radioactive isotope for, well, it's just saving time.
Genius.
And thank you. It's kind of you. And I is it weird? Like I think I've been a VC long enough. I think I just took the word evil as a compliment. But
It was an adverb for
it's all
genius.
good. It is all good, all good. And we are um uh you know we're so transparent that if a founder wants to know if they're a fit for us, just like literally our investment criteria are posted on our website. And sometimes there's a valid question. And so like 90% of my pass emails are like, here's this link, we don't do that.
Yeah. Yeah. And so where have you sourced your most exciting deals?
From founders we've already backed. Founders know. I mean,
Yeah.
founders know more than VCs. Founders as angels are my favorite co-investor. Actually, my favorite co-investor is revenue. If a company doesn't need to raise money at all, that's like the best. We love profitable businesses. Bloomberg L.P. itself never raised any outside capital. Now, granted, Mike had a big severance payment that he put in, so he was able to self-fund it. But the only reason to have a VC is because you have no other choice. And then once you have no other choice, you might as well have the best possible one you can, because it helps build the business. But founders know so much that we just tend to go to them. And then, we the range is really wide. There's no like one consistent thing. I mean, in one case, it was like an intern who had worked at a company that we had been friendly with 15 years earlier. And in another case, it was, somebody's like college roommate, all kinds of stuff. I would just say, and this is, unfortunate news for many founders that I do think is worth knowing, is cold pitches. Zero of our best performing investments have been cold pitches, and we've invested plenty off of cold pitches. And I don't know why that is. I think my suspicion is that even if you're out of network, and we're very conscious of the fact that underrepresented founders have different access to the network, and we take that into account. Like if like a again, I hope not to insult anybody on this call, but if like a recent graduate from Stanford Business School who is a young white man cold emails me, I'm like, this person sucks at networking. Because if that person cannot find a warm intro to me, shame on them, kind of a thing. But we'll take it differently depending on where geographically somebody's from, what their life story is. But I think it's not that hard to build relationships to find your way to somebody. And so particularly, not everything we do is B2B. Some of the things we do, masterclass, for example, are face an end user and have a consumer. But especially if somebody's selling to businesses, the way we think of it is selling to your investor is not that different than selling to a customer. So if you can't get a warm intro to your investor, good luck selling a $500,000 deal to Delta or American Express, or if that is your customer type. So that's kind of roughly how we think about it.
That's actually a really, really great point. Do you have, like, at the risk of stating the obvious for folks in the room, I don't want to insult anybody's intelligence, but what are some tips to get warm intros?
Again, back to founders. Like, I think that it's a mistake to think that all warm intros are created equal. So like I have like really good friends who, if they send me a deal, I'm like, well, this is obviously very unlikely to be a good company because this person has no clue. They might have been my best friend from high school, but that doesn't mean they know anything about startups. Whereas founders, especially founders of already successful companies, just tend to know. And the thing I'll say, and we've shared this a bunch before in public, and so I don't feel like I'm sharing a state secret, but folks seem to not fully believe me, is oftentimes the very best investors at first for any company are founders of relevant, successful businesses, because they know what it's like to build a company. They have enough money to get you going, and their word with other investors just means a ton. And so I'm just popping a link into the chat so you have, that's kind of what we include in the future of work. That's a reverse pitch we once did where we pitched ourselves to founders. So that's our VC pitch deck for ourselves. It's a few years old, but it's still current enough.
Okay, so you get an intro or you get a warm referral. What makes an opportunity stand out for you, other than clearly the person who referred it?
Well, again, the person who referred it, it can be a reason, but usually that just is it's hard, that's hardly ever a reason to invest. It's often a condition that helps us look, but it's hardly ever a reason to invest. We are, and again, we're public about our criteria. Um, we're really just looking for one reason to think based on some fact, not that this could be one of the greatest companies in history, because that's the bar. The bar is, does it have a shot at being one of the greatest companies ever? And that reason can take many different forms. Sometimes it is the exceptional life experience of the person starting the company. I built this kind of model at such and such company. I realized it was flawed for this reason, and now I want to create it elsewhere. Okay, that's like a pretty good reason to pay attention. Sometimes it is extraordinary traction. They have very few users, but those users are hyper engaged. Sometimes it is, an insight. And what I would say is most founders tend to focus on ticking all the boxes. And I don't want to say that's valueless, because it's not valueless. Like, you obviously need to be qualified and have a team and stuff like that. But you need a big enough market. But you don't get a great company by checking every box. You get a great company by being just barely good enough at everything you need to be good at, and then having one thing that is the extraordinary thing that really stands out. And then as far as identifying it, we try to stay focused on things that we know. So like if somebody has a shopping app, I mean, we don't do it. And part of the reason we don't do it is we don't understand it. Like, I don't know what extraordinary looks like. But if I see an AI tooling company, we've seen hundreds of them, if not thousands, over the years. And so to some extent, the way I think about being an early investor is it's not a logic game. We try to apply logic to it, but it's usually a stretch. It's more like, if you know the music business, what an A&R person does in the music business, artist and repertoire. Like, they go around and they sign the new bands. And how do they do that? It's like, I don't know. Like, I listen to a lot of jazz, and I just know, because I've listened to thousands of jazz. I don't, but like one in A&R would, what a great band, what a great act sounds like. And it's very similar with startup founders. And I can point at some factors, but the reality is it's accumulated. What we call gut instinct, which I don't really believe in, is really just accumulated experience. I hope it's accurate and has good judgment, but obviously we're wrong more often than we're right, which is why we need a portfolio.
So I actually want to dig in a little bit into what your fund is actually like. Like, how many partners are there? How actively are
3
you?
equal partners. Sorry, I interrupted your question,
No,
Leslie.
no, no, go for it. Just tell us about the dynamics. Like, do you
3
meet?
equal partners. We've been 3 equal partners since the beginning. Karen Klein on the East Coast, and James Cham here in the Bay Area with me. James was named Insider's #3 seed investor, which was awesome recognition of a lot of great investments that he's led. And $75 million fund. We're investing out of our 4th $75 million fund. We've been doing exactly the same thing. Like, we don't believe that the destiny of venture capital firms is to grow, unlike the destiny of startups. Like, the destiny, again, back to the doctor analogy, like, my job is not to be the star athlete. My job is to be the doctor to the star athlete. And so I don't need to grow in order to do that. I just need to get better and better and better at my craft.
And people might not know the origin, right? So the name Bloomberg and Bloomberg Beta is an actual person. So how did you know Michael Bloomberg before? And how, I mean, is Bloomberg Beta completely independent, or like, do you kind of, are you a CVC, as you described it early, and when like they came to ask you about
We are
striking?
not. We are not a corporate venture capital firm. I had NVIDIA as an investor in my startup, and they were pretty good as far as corporate VCs go. Um, the uh, but generally corporate VCs are terrible because they have an interest other than the interest of the success of your startup, which is they want the mothership to be successful. And so a really important principle to us when we started Bloomberg Beta was not to fall into that trap. And so we just invest to make money. We're just a regular fund. You know, the partners have carry. Like, we make money when founders make money. We're really proud. 88 founders we've backed have become millionaires, and 22 of them have made $10 million or more. Like, that makes us really happy to see founders succeed by whatever definition, but just money is one you can measure. Um, and Mike Bloomberg is the founder of Bloomberg L.P. Company's existed for 40 years. It is, you know, a financial data company in Maine, although it has some other lines of business. And Mike has control over the company. It's still a founder-led business, but he was actually not the CEO of the company when we started Bloomberg Beta, because he was mayor of New York. So actually the company at that time was in a blind trust. He wasn't involved in its day-to-day management in any way, shape, or form. And so we are affiliated to the extent we carry the Bloomberg name. We invest in areas that are broadly of interest to Bloomberg, like how business works. We are part of the Bloomberg culture. So things like transparency and customer service are really, prioritized parts of the Bloomberg culture, but we invest independently. So we don't ask anybody at Bloomberg. There are only 4 people at Bloomberg who are even allowed to know what we invested in before it's public. If a Bloomberg journalist calls me and they're like, "Did you invest in company X?" I'm like, you could just ask the internet and it would give you the same answer I'm going to give you. And so, we are independent in how we invest, but very much part of Bloomberg in a cultural way. And the other thing is that the returns that we generate, like profits from the rest of Bloomberg, go to fund Mike's foundation, Bloomberg Philanthropies. So when founders make money for us, it goes to fighting climate change and educating kids and fighting guns and all kinds of other wonderful things.
That's pretty good. So let's talk a little bit about your experience as a founder of a startup. And we picked some great little nuggets that you've put peppered into your LinkedIn here and there. But tell us, but first you said that you were, I don't want to put words in your mouth, but you were pretty unimpressed with your VCs. So tell us about your experience as a founder. Just give us a story.
Yeah, they were, look, I started a company with a woman. She was CEO. I still have somewhere my Graham Walker notebook about money knowing no gender, but the VCs know gender because they are crazy sexists. I have never seen sexism like that in my life. We would walk out of pitch rooms. Yeah, and I'm not even we would walk out of a pitch meeting and the VC would pull me aside and be like, "You're the real CEO here, right?" And I'm like, "No." And on the one hand, I was like, "You dipshit." And on the other hand, part of me was like, God, this guy sucks at his job, because he missing the point. And now as an investor, I kind of think their sexism, their racism, their whateverism, that's my profit opportunity. So one of the reasons we lean forward on underrepresented founders is because others lean back. And so we want to beat them. And this is one way we can beat them, in addition to it being the right thing to do. We had a VC. I could tell you lots of horror stories about that. But then the other thing was what's that?
Grab the popcorn.
Yeah, right. If you want to, I can definitely keep going. But and I see Malvina saying that about a product for kids. Yes, if you are an underrepresented founder who is starting a business that is stereotypical for a founder of your background to start, good luck reinforcing, dealing with the fact that you've just reinforced so many stereotypes that VCs have. But it was crazy how bad they were. I would drive an hour to go to a VC office only in the first minute to be like, "But we don't do that." And it's like, dude, why did you not just look at my website or the pitch email? You had your assistant set up this thing and I walked in this fancy office and you have this little tray with all your business cards and you handed me one and she asked me if I wanted water and plug in my laptop and all this shit, just to discover something that you could have found out in 90 seconds. And that's part of the reason we're transparent. And then, by the way, to be fair, there were also things that VCs did that I didn't understand that now that I'm in the seat, I do understand. So I did not understand the obsession with ownership stake. I was like, okay, I get why you want to make a return on your money, but why do you care whether you own 5% of a company or 10% of a company or 15% of a company? And now I get that. Yeah, and I mean, I'm happy to talk more about it, but in general, it was just like, really, this is the top of the game. And now, as a VC, I've spoken to and co-invested with the greatest venture capitalists in the world. Um, the people of the biggest funds and the biggest names, and they are no different than you and me. It's not like they have some magical ability to like deeply insightfully penetrate into the inner workings of how a startup is operating. It is a lot of guesswork. If they were really good, they wouldn't need portfolios either. But even the best VC around, the vast majority of their investments fail. And so, we're all just trying to figure it out as we go.
Yeah. I can I tell I normally don't say this when I'm being recorded, so it's gonna be a first time, but sometimes I think so I'm gonna ask
Oh,
you a
I
personal.
forgot this was all recorded. Okay,
Yeah,
well,
it's recorded, but I might decide not to post it online after this. So here's the truth. So I've been a VC for 3 years and an operator for 20, founder for a lot longer than that. And so I have a lot of experience with bad VC behavior on, as a founder and as a leader of the Female Founders Alliance. And sometimes I see that behavior and I think, my God, if that's what it takes to be a successful VC, maybe I don't have it in me. So give me some hope here. Is there
oh,
a better way
I
to do?
mean, look, what it takes to be a successful VC is finding one great company a year, let's say. And so, there's every reason to think you have that in you. And the rest of it I kind of think of as being a cargo cult. It's like, oh, well, VCs all say like, thank you for thinking of me. Do I need to say thank you for thinking of me? It's like, no, obviously you don't. And so it's deciding for yourself which aspects of the VC norms serve and don't serve. And look, the reality is we have to deal with this world that we're in. So I'll give you a very vexing dilemma. Here's a vexing dilemma.
Right, give it to me.
Let's say you're pitched a business that you really like, and it's started by a founder who other VCs are going to be discriminatory against for whatever reason, because of their accent, because of their race, because of their gender, pick a thing. You're going to need those VCs' money at some point, in all likelihood, to grow that company. And so the fact that other VCs are discriminatory is the fact that is going to make it harder for that business to succeed and to access the capital markets. And so then what do? Is the answer that factor it into the price? That's the rational answer. Is it's gonna, if they're doing something that's I'm looking at something right now in media. Media is traditionally really hard to raise money for. That brings the price down because it's hard to raise money. But that seems unethical, to have a lower price because another VC is discriminatory. And so then, like the real talk is, how do you figure out what to do? And the answer is, I think, is you figure out ways for that company to thrive without needing as much money. You pose the question really directly to the founder and you ask them their thoughts on it. I mean, in my case, my co-founder for the VC-backed business that we started, she was almost entirely kind of by personality programmed to ignore any sexism. And so I was more concerned about it than she was. And we worked it through. But we're pitching in one of the VC firms that we worked with was sued by one of their former partners for gender discrimination. And we asked in the final pitch meeting, how should we feel about working as a company with a female CEO I asked to work with a VC firm whose partner is former partner is suing them for gender discrimination. And you just have the real talk about it and try to figure out what to do, because there's just that, like, there's too much VC politeness. There's too much founder politeness. Like, time is short. We got to get to it. And, and I'll just say, a thing that people often find bothersome about me is I don't make myself super available from a time perspective. Like, I will tell people like, I'd love to help you, but I can't. And that's just, I got family and I have, a desire to finish emailing by 6 or 7 p.m. Not that I always succeed, but that's part of it too. So it's a long-winded answer, Leslie, to just say I think there's every reason to think you can be a wildly successful VC, just not in the same way as other VCs have been wildly successful.
And I think the bigger point there is that there's a lot of different ways to make money.
Yeah, I think that's right.
It's so funny because like the really successful VC bets are the ones where you're the contrarian and you're right, but for some reason VC does not behave that way. It behaves as a consensus.
Well, I mean, I think that's the paradox is, like take a company like Replit. We were the first investors in Replit. If you know it, it's an online IDE. It's been wildly successful. Um, Nobody else wanted to come in for a while. So that was cool for a minute that like, oh, look at us doing everything differently, but eventually we need their money. So you have to be contrarian during the brief window of time when it is possible to be contrarian, and then your thing has to be the consensus bet. And so being permanently contrarian means the company's going to die. And so that's the paradox that I think we all have to work through is sort of when to be contrarian, when not to be contrarian. The reality is most of the most successful VC bets were not contrarian at all. Most of the most successful VC bets, lots of firms were clamoring to do. The winning firms won their way in, not at the very earliest stages necessarily, but certainly by the A or the B. And it's like Airbnb. Paul Graham was like begging VCs to come in. Like, how contrarian is that when Paul Graham is begging you to come in? It's just so I think it's a timing and dosage thing, and like a lot of things in startups, you can't reduce it to a simple principle. And if you could, a lot more people would be more successful at it.
So let's move a little further ahead. After you go through your process, you make an investment. So how do you work with founders after that?
They are my boss.
How many bosses do you have?
Several dozen at any given time. But the way I think of it is they hired us. We sold them money. The price they paid for the money was equity in their business. They're my customers. Their job is to decide what to do. My job, like if I worked for them, is to tell them what I think. And so it very frequently ends up being, we make customer intros. We help them strategize about their next fundraising round. We help them figure out how to go to the press. When something super fucked up happens, they call us, I hope, like, oh, we just got sued by a company with a similar name that says we're infringing on our name. Oh, we hired somebody and she just stole a lot of documents and posted them to the internet. What do we do? That kind of stuff. We love the oh shit situations because, that's when we feel like we get to be really valuable to people. But it varies a lot depending on the startup. And what we don't do, we don't take board seats because boards are the worst. And because I don't want to be the founder's boss. I want the founder to be my boss. And so the board reverses that, legally speaking, at least. We're never going to be the people who are like, we need a monthly check-in to hear what's going on. We do like getting written updates just so we have some information, but who knows? And the like I'll just say the metric we use to run our fund is founder net promoter score. We actually even tried to get going this system where founders can rate their VCs. It's called Founders Choice, founderschoicevc.com. If you want to do, if you're on Crunchbase and you've been VC backed, you can definitely fill it in. I wish it had more, that more people used it because it'd be more useful. Right now it lists Khosla number one, which just shows me that the CMO at Khosla, who is really good at doing her job, because there's no way Khosla is the number one choice of founders. Most founders despise them. Yeah, that's how we try to do it.
I think that your spiel just now got you quite a few fans here in the audience.
Oh, well, thank you. And look, and I'll just say, like any VC, a lot of founders will meet a VC and be like, I really like them. And it's like, you do realize they run a marketing job. They sell money for a living. Money is a commodity product, literally by law. The money they sell you is legal tender for all debts, public and private, the same way as anybody else's money. And so, like all commodities, they differentiate either on bundling something with it that isn't a commodity, their service, whatever, or brand. And so VCs are incredible. It's actually amazing to me VCs as often make a bad first impression as they do, because our whole job is manipulating your first impression on some level. So, I'm the villain in people's days as often as anybody else. It's a messy world, and it's kind for people to say that, but it's not, like my job. One of the phrases I really dislike is founder friendly. People often say we're a founder friendly VC. I'm like, no, my job is not to be your friend. My job is to help you build one of the greatest companies in the history of capitalism. And sometimes that will feel like friendship, and sometimes it will not.
Carly Rector just wrote, some people set the bar very low. Amen.
Indeed, I think that's really true. And I mean, look, that's one of the reasons it's fun to be a VC is my competitors suck at their jobs.
No, it really is a low bar. Kindness. Such
I
a
mean, I had some guy, Rick Clow, who's a founder who I really adore, when we're not in his business because it's not in scope for us, he does something consumer related about house renovation and energy efficiency. But he posted this thing on LinkedIn a few weeks ago about about like us being kind to founders. And I read it and I was like, wow, like the fact that this is stand-up behavior, like when the pivot didn't work, I said, keep going. It's like not wildly like I've done some things I'm really proud of where like I laid on train tracks for a founder and put a reputation at risk or something like that. But yeah, the bar is pretty low out there. And look, from a founder perspective, I have a lot of empathy because going and finding people who you want part of your journey for this one thing you're building that you might be on the journey with them for 10 years. I mean, it is a shotgun wedding from which there is no divorce. And so it is a very high stakes, difficult, painful, game that we are all playing. And so just trying to make it a tiny bit easier for folks. And I'll also post, sometimes I write about, kind of founder advice kind of stuff. And I put a piece together on how to check VC references, where the basic thing is founders underdo it. They just generally underdo it on checking VC references, in part because you can't check references for every VC you're pitching. But as you go down the process, then that's time to, to figure out, like, is this somebody you want on your cap table for the next 10 years?
Well, I mean, I can say from the other side that it feels like there's such an imbalance of power, particularly when you're not well connected, when you're raising from a point of disadvantage. It doesn't feel like you have the power to say no to money. And it's really incredibly hard if you've been like bootstrap forever and like hustle
Totally.
butt off. It's really hard to say no to money. But on the other hand, I personally, you know, there are investors that I wish I had not taken their money. I have cases where I
Yeah.
have paid investors back, like literally took money out of my
Yeah,
401k
we
and
had a case where another investor came into a business, just one, I think, and we were so morally uncomfortable with them that we asked to sell into the next round. We're just co-investors with them. In general, we don't really care who the other investors are when we're thinking about investing because we make our own decisions. So we'll never ask a founder in a pitch meeting, like, who else is in? It's like, oh yeah, like if I want to go to the VC party, like I got invited to a VC party tonight. I don't need a founder to invite me to the VC party. But the, you know, the upshot of diligence to me, by the way, is not necessarily that you would say, no, I'm not going to work with this person. Sometimes it's just knowing what you're getting into and having, like, to me, a lot of the tradecraft of being a startup founder is making hard judgments when none of them are obviously the right answer. But there's a really big difference between making it in a really well-informed way and acting based on that information and making it blindly.
yeah, 100%. Like when we are going through a diligence process and trying to get to an investment decision, one of the questions that we ask ourselves all the way at the end of the process is, will this founder make us proud? And
Hmm.
like not enough founders ask that about their VCs. Like, is this VC going to make you proud? Because you're stuck with us for like a decade or longer.
Totally. I think that's great. And I think founders should ask more questions about, like, who are your LPs? Easy
Yeah.
for me to say because mine is like literally on the door. But you know, uh, where are you in the life of your fund? Like, what's the most successful investment out of the current fund? That kind of thing. And understanding where your VC is, a lot of the way they behave, you can just predict from that. And I saw, Starla, you asked a question about dealing with rejection. And I think a lot of it for me is just knowing where the other person is coming from. Like, okay, it's not like they looked into my soul and deeply analyzed my business because they're so fucking smart and then rejected me. It's like they got a bajillion things. This thing landed in their inbox. It said video games. They don't feel confident in what they know about video games, so they passed. No big deal. And easier said than done because it always stings, or did for me. And I think managing your emotional life as a founder, let's put it this way: if I'd had as much therapy when I was a founder as I do now, I think it would have been a lot easier. But it's hard.
I want to read this. That Jenna gave me a cheat sheet and that she found on your LinkedIn, and you wrote, Roy was responsible for fundraising and failed to raise a seed investment from VCs, got 40 no's, or more accurately, 40 not a yeses, since many VCs simply never said anything. Despite raising 8.6 million on Kickstarter, only got 2 term sheets and 1 verbal offer, and it took 7 months from first meeting to closing the round. Failed to have any semblance of work-life balance. Nice work.
And you
So,
know, the one of the things in terms of founders trying to raise, so I was not a very good fundraiser. Um, uh, and therefore I'm very careful about what I say about fundraising because I just recognize that I am, you know, limited in my own skill, but I pay attention to what works and what doesn't, as opposed to what people say. So like a lot of people say, like, come pitch us when you get to $1 million of ARR. But then when you look at what they actually invested in, most of the stuff they backed never got to $1 million of ARR by the time they invested. Well, okay, well, why is that? What were they actually looking at? And so I've worked very hard personally to try to understand what works and what doesn't, as opposed to what people say about it. And Bea, thank you for saying that, or B, I'm not actually sure if I'm saying your name correctly because I think we only communicated in writing. And I'll just say, I do not respond to all cold emails with thought. I mostly hit delete. But so that's a reflection on whatever you wrote in your first email, as opposed to just a reflection on me.
oh, I love that.
And
That's,
if you connect with me on LinkedIn, like remind me where we met, you know, kind of thing. Because if I just see a name, I'm just going to hit delete. Like life's too short.
and LinkedIn is too full of junk requests.
Especially, I mean, look, and I'll just say this as a middle-aged white man, you know, the number of younger white men who write me and they're like, we have a lot of connections in common. We should have coffee. And it's like,
No.
I don't think that's a reason.
No.
Um,
Um, we are getting towards the end of our hour. I would love if anybody has questions to put them on the chat, and I'll start kind of taking them in and asking Roy about them. But in the meantime, I kind of want to know, like, what am I not asking you that you would want to share
well, I
with?
think Felicity just put something in the chat, if I can,
Yeah, go
about
for it.
whether there's any research on how to cut through unconscious bias. So, if there is, I'm not aware of any that's specific
There
to
is.
this context. Okay, so Leslie knows.
I mean, the Laura Wang research, we can share it afterwards. I'll share it with you as well on like the promotion questions. So there is some research, but I'm going to do a poor job. So we'll share a link afterwards. As a professor out of HBS, she's the one who wrote about how the questions were asked tend to reflect the biases on the side of the investors that you're pitching. But go ahead. Let me kind of put it back to you.
I mean, you know, so I don't know. What I would just say, I've done a bunch of Q&A on this. So I do this thing, it was my COVID project that was like tips about how to work, because I'm just shocked. Like when I became a parent, what to expect when you're expecting was really useful. And I was like, how is there nothing like this about work? So our kind of early attempt at that is called This Is Not Advice. And, you know, what I would just say is VC, like many other social dances, the process of VC pitching has norms and conventions. And part of being in the network is the relationships, and not all LinkedIn connections are created equal. Um, you know, but part of it is relationship, but part of it is just knowing the norms. And so oftentimes it's just figuring out, and founders of relevant businesses, if you listen to how they talk, you'll sometimes start to pick it up, is another reason to work with them. Is it's just about knowing what phrases to share and use about something, which metric to put first. And there are enough different situations. I could live workshop any one, but enough of the things from underrepresented founders, it's not, for me at least, I may have unconscious bias, of course. And so who knows? I don't know how to cut through my own unconscious bias as much as I'd like to. Um, and we've invested in some things like Charter that put out good research on this. But some of it is just like, no, they're just not telling an effective story. And some of that is that the conventions for what's effective are socially constructed. And so you got to know the community in order to be able to, you know, to access that. And Malvina, you asked, is hardware a lost cause for investment? Um, No. I mean, as a former hardware founder and a current, I mean, we made an offer to invest in a hardware company as a follow-on, I think, but like literally 2 days ago. So it's not a lost cause. I would just say hardware is more difficult. It's more capital intensive. It's, you know, the margins can often be lower. And so it's important, given that, to have a plan that cuts through that. And so sometimes I see hardware businesses where the hardware is additive, but not essential to the plan. And it's like, unless you need hardware, why would you do hardware? Like, it's just so brutal. And so, so it depends. And in general, I don't believe in changing your business based on what VCs want. I mean, there's such a small universe, and every wildly successful company, or maybe not every single one, but every company, um, almost every wildly successful company had a phase where what they were doing was not popular with VCs. And so it's important to know what you want to do. The VC is an input to what you want to do. They're not a market signal. And just on avoiding hardware if you can, it's a piece I wrote about focus. And Barbara, your question about the difference between data companies and data infrastructure companies, I guess the question to me is what hangs in the balance of that answer? And if you want to unmute and share, you can, but I'm not sure, like, why do I need an answer? I don't know the answer to that question, and I'm not sure if I need an answer to that question.
Well, I'm struck by the concept of a data infrastructure company because the infrastructure is really a server that holds the data or the mechanism that delivers the data, as opposed to mechanisms that generate data or
Sure.
organize data. And so I know I'm having a trouble with what's the dividing line between selling the data as a product and selling the infrastructure that generates or delivers the data. I'm having trouble with the terminology. I'm sorry.
No, it's okay. There's nothing to apologize for. I guess the question is what hangs in the balance of that terminology. So meaning some companies have a data set they generate and sell access to that data. Some companies have a method for processing the data, like you said. And the hard thing to know is if your customer cares about the difference, then use their language. You know, if your VC cares and you want their money and the language doesn't seem false to you, use their language. I mean, I had this debate yesterday with a woman we backed it was a discussion, who is doing something around creative industries. And she's like, but it's not a creator economy company, XYZ reasons. And I'm like, okay, but to a VC, it's a creator economy company. So you got to decide, do you want to snap to grid on their way of describing it? Does that matter or does it not matter? And there are some reasons sometimes to be distinctive, and there are some reasons sometimes to be to conform. And you being savvy about choosing, I don't think there is one answer to your question. I think there are different answers in different situations depending on what outcome you want, as long as you're being truthful. Masterclass is not a data or data infrastructure company, nor is Slack.
Fair. Thank you very much.
Yeah, of course. Thank you for asking.
AI makes data so much more interesting. So I think we're going to see more segmentation in the data category going forward. And that's why I asked the question. Thank you very
I'll
much.
just say, every week some founder uses an acronym with me that I've never heard. And I'm like, well, what's that? Or I'll furiously Google it. Sometimes I feel stupid.
So to the point of, is hardware in vogue or is data in vogue? Let's talk a little bit about the current market environment. So it's been a slowdown over the past couple of years in VC compared to the big peaks of 2021.
Yeah, I would say more 2021 was a bizarre flash, and we've returned to the pace before that, but it is certainly a slowdown compared to 21.
So what are you seeing now in 2024?
Same thing we've seen basically every year. I mean, I don't really believe in fashions about VC businesses. And so we're seeing AI applications, but we backed our first generative AI company, which was Textio, in 2016, something like that. And so, yes, there are definitely more AI, there's more LLM wrapper companies, there's plenty more LLM infrastructure companies, but there's also lots of stuff where you're like, this could have been pitched to me 2 years ago, 3 years ago, who knows? And so I'm not, by the same token of VC not being a market signal, I'm not that thesis led in what I want to invest in. I don't sit there thinking, I really hope that somebody pitches me a blank. I mean, I have a couple of those at any given time because I'm human, but it's not that central. I'd much rather just know what I know and know what I don't know. I mean, I'm talking to a company that's in the book industry. And it's I don't know, why am I doing something in the book industry in 2024? I could give you reasons, but it's no different than if I were looking at it in 2022, I don't think.
What about the pace of investing? Do you find that your portfolio companies are having more traction, raising follow-on rounds, or what are you seeing?
I think founders and VCs all love talking about the weather, which is to say round prices are up, round prices are down. At the level of, and LPs love talking about it too. I don't know. Like it all seems the same to me. I think that like it speeds up, it slows down, but it, other than a couple of pronounced moments where like, okay, big late stage pullback in 2023, like, okay, that was pronounced. If you're raising a Series D and you didn't have material revenue, you were going to have a harder time in 2023 than 2021. So there are pockets where things happen for a period of time, but in general, it's kind of the same. We write the same check size we've been writing. We see, and some months are slower, some months are faster, some years are a little bit faster, but it's much more the same than it is different. And Jeff Bezos, who I used to really think was like a management genius, and now I don't quite think so as much. But obviously, if not the most successful founder ever, he can duel with somebody else over that. Uh, has this thing about saying like, don't bet on what changes, bet on what stays the same. And what stays the same is there are always more people who want to start companies. There are always customers who have unmet needs. In his case, it's like consumers will always want a lower price and more selection. And I really do believe in betting on the things that remain the same as opposed to talking about the weather.
So, final question, but you said there's always one or two things that you want to see more of. So what are the things that you want to see more of right now?
So one of the areas that we've been on for a while is what we call a hot swap company. And what we mean by that is a company that competes directly with a big incumbent by using technology to just be a better version of that. So like we back Newfront, which is an insurance broker. We back Doma, which is a title company, a real estate title company. And I wish there were more of those. They're more complicated, but you have no product market fit risk because everybody knows that, you need accounting firms or whatever the thing is you're in, you need a pizza shop, we're not going to back a pizza shop, and so there's no product market fit risk. There's a lot of other execution risk. But that's a category where we always want more things. I also always want more things that serve old people. Old people are a growth market. Most of the things that serve old people, in part, I think, because most founders are not yet themselves old. My wife thinks that like this is why I'm fascinated by business about old people. She's like, as you approach 50, it's like, yeah. Um, but but old people are a growth market, and most things that serve them in the context of death and decay. And I would rather have some things that serve them in the context of their thriving, because like there's plenty of professionally active 68-year-olds, and where are the labor marketplaces for them, dot dot dot. And that's a very big and growing market that founders basically ignore.
Well, I would love to see some of those too. Definitely interested in aging population. All right,
And
Roy.
I also just say, like, I'm easy to find. I can't promise I will always respond, but I will try when the things are, directed at us and when I have something I can offer. And it's good to see some old friends here on this call. Yeah, and I mean, my view is none of us really knows what's going to work. We're just kind of comparing notes and trying to figure it out as we go.
Um, let's wrap with one final thing, which is what is one thing that this community can do for you?
Oh, just keep doing what you're doing. Build great companies. I don't know. Name names when people are bad actors, because that's how we all learn. And I realize it can be scary to name names, but you can name them to me and I can name them in public. Sutter Hill canceled the term sheet on a female founder we backed because they said after signing the term sheet that she was too aggressive. And I was like, holy shit, did you guys just say that out loud? And they're like, known as a great VC firm, but I would not want somebody to be beholden to a term sheet from them again. So name names. I don't know. That's like, I hate to be on such a negative note, but otherwise just keep doing what you're doing. Build great things. Don't let the VCs get in your head. It's just marketing.
Amazing. Well, thank you so much for spending this
Thank you
hour.
for having me.
Thank you everybody for joining us.
Oh, and you
Next,
got Charles next. You're getting upgraded. We've been
Yeah.
LPs in every one of Charles's funds, maybe except the last one. I can't remember. He doesn't need our money anymore. He's our most frequent co-investor, even though we basically never talk to him. Like we just end up in all the same deals because we really like the same kind of stuff, I think. Not all the same deals, but we have significant overlap. And I think Charles is now, let's not forget, he is now the chair of the National Venture Capital Association. So he is literally our country's, officially designated venture capital representative. And I think he's really smart, knows the game.
also a really, really great mentor to emerging managers. So really, really excited to have him. Please join us next time. And the other shout out that I will give founders is that applications to our Catalyst program are still open. It is specifically designed to help first-time founders sound and act like second-time founders so that you kind of know the rules of the game in a way that would take you a lot of time and a lot of spent money doing otherwise. So please apply. And with that, thank you so much, everybody, for spending this time with us. Thank you, Roy. Thank you, Jenna. And we will see you next time.
Thank you.
Thank you. Thank you.
Thank you.
Thank you, Jenna. Thank you, Leslie.